Welcome to the era of the insurance desert. Across the globe, coastal paradises are becoming financial no-go zones. It's not just a premium hike anymore, it's a total withdrawal. From the sunny shores of Florida to the cliffs of California, major insurers are packing their bags and leaving. This isn't just about bad weather. It's a fundamental shift in how we value where we live. Today, we're diving into why global insurance giants are blacklisting coastal real estate and what it means for the future of the housing market. Buckle up, because the landscape of ownership is changing fast. Let's look at the numbers. In Florida, the epicenter of this crisis, at least 15 major insurers have exited since 2022. Farmers Insurance, a household name, discontinued its own branded policies there. That left nearly 90,000 policyholders scrambling for coverage. It's a similar story in California. State Farm, the state's largest insurer, stopped accepting new applications. They recently announced the non-renewal of 72,000 more policies. But this isn't just a US problem. In Australia, experts warn that premiums in Sydney have surged by over 60%. In New Zealand, homes are becoming uninsurable due to rising sea levels. When the safety net disappears, the market follows. Entire zip codes are being flagged as high risk. Buying, selling, and even maintaining a home becomes a battle. So, why is this happening now? To understand the why, we have to look behind the curtain. Global giants like Swiss Re and Munich Re provide this backstop. Between 2018 and 2023, the cost of reinsurance doubled. This reinsurance shock sent ripples through the entire industry. Reinsurers are no longer willing to absorb the losses. They are shifting the burden back to primary carriers. And those carriers are finding that the math simply doesn't add up anymore. They are worried about non-peak perils, things like flash floods and severe thunderstorms. Then there's the climate epiphany. Insurers used to view climate change as a slow trend. Now, they see it as catastrophic loss. In 2024, global insured losses from natural disasters hit $150 billion. That's one of the costliest years on record. Coastal markets are especially vulnerable to non-linear impacts. Accelerated sea level rise is pushing storm surges deeper inland. Historical data, once the gold standard for risk, is becoming obsolete. You can't predict the future by looking at the last 50 years. This uncertainty makes it impossible to price a policy accurately. When models fail, insurers pull out. It's a defensive move to protect their own solvency. They aren't just raising rates, they are managing their exposure. Exposure means the total value they've promised to pay if a disaster hits. In coastal zones, that exposure is simply too high. Economic factors are also tightening the noose. Inflation hasn't just hit your groceries, it's hit construction. Reconstruction costs have soared by 55% in 5 years. Labor shortages and expensive materials mean every claim costs more. But insurers are often regulated by state governments. In places like California, they can't raise premiums fast enough to keep up. Sometimes an insurer pays out $1.35 for every dollar collected. No business can survive that for long. If they can't charge a fair price for the risk, they leave. Then there's the litigation crisis. Florida, for example, has been a hotbed for insurance lawsuits. It accounts for only 9% of U.S. home insurance claims, yet it represents nearly 80% of all insurance lawsuits. This legal environment, combined with fraud, makes the market untenable. It's a perfect storm of environmental and financial pressure. What happens when the insurance vanishes? We call it the Cascade Effect. First, property values begin to erode. A non-renewal letter can drop a home's value by 12% instantly. In high-risk areas, homes sell for tens of thousands less than they should. Next, the mortgage market becomes vulnerable. Most bank loans require proof of insurance. If you can't get a policy, you can't get a mortgage. And if you already have a loan, the bank might force-place insurance. This is often double the price for half the coverage. It puts homeowners at a high risk of default. Some experts warn of a failed mortgage market in coastal regions. If banks stop lending, the real estate market freezes. This isn't just a problem for wealthy beach house owners. It affects entire local economies. As private companies flee, public systems are pushed to the brink. We call these insurers of last resort. Programs like Florida's Citizens or California's Fair Plan, these were meant to be temporary safety nets. Now they are often the largest insurers in their states. Citizens in Florida has over 1.4 million policies. But these plans often offer less coverage for more money. And they lack the massive capital reserves of global corporations. If a huge storm hits, these state plans could run out of money. Taxpayers would then face assessments or special taxes to cover the gap. This puts an even greater strain on the community. It also impacts municipal finances. Coastal properties provide the bulk of local tax revenue. If their values drop, cities can't afford essential services. Things like the seawalls needed to protect the very same houses. We also have to talk about the assignment of benefits fraud. This is when a contractor convinces a homeowner to sign over their insurance claim rights. The contractor then inflates the repair cost and sues the insurance company. This legal maneuvering drives up costs for everyone. It's a systemic issue that regulators are struggling to control. Beyond the US, the Mediterranean coast is facing similar threats. Wildfires and rising temperatures are making coastal tourism hubs high-risk zones. In the UK, properties on floodplains are seeing premiums skyrocket. The global protection gap is a silent economic crisis. It's not just about the water, it's about the heat, the wind, and the legal fees. The global protection gap is a silent economic crisis. It's not just about the water, it's about the heat, the wind, and the legal fees. Governments are now debating managed retreat. This is the controversial idea of paying people to move away from the coast entirely. It's a hard pill to swallow for communities with centuries of history. But the math of rebuilding every 5 years is becoming impossible. Technology is playing a dual role here. On one hand, drones and satellites allow for hyper-accurate risk assessment. On the other hand, this same accuracy is what allows insurers to blacklist specific streets. There's no more blending high risk with low risk. The data is too precise. Is there any hope for the future? There are some signs of stabilization. New laws are being passed to curb frivolous litigation. Some smaller specialized insurers are slowly entering the market, but the global protection gap is still widening. In early 2025, insured losses hit $100 billion mid-year. The industry is shifting from risk transfer to risk mitigation. This means homeowners must invest in making their homes more resilient, installing impact windows, elevating structures, or reinforcing roofs. But for many, the cost of living by the coast is becoming too high. We are entering a transition to a lower coverage environment. It's a reality check for the global real estate market. The ocean is beautiful, but it's becoming an expensive neighbor. Understanding these risks is the first step in planning for the future, because when it comes to the climate and the economy, we're all in the same boat. The era of cheap coastal living is coming to an end. We must adapt, innovate, and prepare. Thanks for watching this deep dive into the insurance crisis. Stay informed, stay resilient. We'll see you in the next episode. This isn't just a temporary glitch in the system. It's the new baseline for coastal living. We're looking at a world where insurance is a luxury, not a standard. The ripple effects will be felt in every sector of the economy, from construction to tourism to local government. It's a wake-up call for urban planners and developers. We can no longer build in defiance of nature. The financial markets are simply refusing to fund it. As we move forward, the focus must be on sustainable, resilient growth. We need new models of insurance and new ways of building. The challenge is immense, but so is the opportunity for innovation. Let's work together to create a safer, more stable future for everyone. Thank you for your time and your attention to this critical issue. In New Zealand, the government is looking at voluntary buyouts for red-zoned homes. This is a massive fiscal burden on a small nation's budget. It's a sign that the private market is simply overextended. The insurance industry is a canary in the coal mine for the global economy. It's the first to signal when a risk is no longer manageable. We must pay attention to these signals and act accordingly. The transition to a post-insurance coastal market will be painful but necessary. We need to rethink our relationship with the coast and the water. It's about more than just insurance. It's about survival in a changing world. Let's keep the conversation going and the solutions coming. Together, we can find a way through the insurance desert, toward a more resilient and sustainable future for all of us. This is our moment to adapt and thrive in a new reality. Thank you for joining us on this journey. See you next time. One last thought. Don't let the complexity overwhelm you. Every small step towards resilience makes a difference. Whether it's advocating for better zoning or retrofitting your own home, we all have a role to play in this changing landscape. Stay proactive, stay engaged, and most importantly, stay hopeful. The future is uncertain, but it's ours to shape. Let's make it a future we can all be proud of. Good luck and stay safe. See you next time. The end is just the beginning of a new way of living. Let's embrace it with courage and creativity. The insurance crisis is a challenge, but it's also a catalyst for change. Let's use it to build a better world for generations to come. Thank you for being part of the solution. Goodbye for now. The world is changing, and we must change with it. Resilience is the key to our future. Let's keep moving forward, together. One line, one house, one community at a time. The tide may be rising, but so is our determination. Thank you, and take care. The story of coastal real estate is still being written, and we're all part of the narrative. Let's make it a story of resilience and adaptation. Thank you for joining us on this journey toward a more resilient and sustainable future for all of us. Every small step towards resilience makes a difference. Whether it's advocating for better zoning or retrofitting your own home, we all have a role to play in this changing landscape. Stay proactive, stay engaged, and most importantly, stay hopeful. The future is uncertain, but it's ours to shape. Let's make it a future we can all be proud of. Good luck and stay safe. See you next time. The end is just the beginning of a new way of living. Let's embrace it with courage and creativity. The insurance crisis is a challenge, but it's also a catalyst for change. Let's use it to build a better world for generations to come. Thank you for being part of the solution. Goodbye for now, and stay vigilant in your coastal property search. The world is changing, and we must change with it. Resilience is the key to our future. Let's keep moving forward, together. One line, one house, one community at a time. The tide may be rising, but so is our determination. Thank you, and take care. Knowledge is power in a changing climate. Protect your home, protect your future. Stay curious about the shifts in our economy. True adaptation always starts with a deep understanding of the local environment. Build better, build smarter, build for tomorrow. Coastal living is changing, but our communities endure. Strength lies in our collective action. Invest in resilience today for a stable 2026. The sea is rising, but our resolve is higher. Knowledge is our best defense in an uncertain world. This is the story of our coast, the end.